Hey everybody, this is Ryan Mallory. We're going to talk about the Amazon stock today, symbol AMZN. Is it going to split? If it does split, what should we expect from it? And whether or not there's a good chance of it splitting. Now, also, the reasons for why it may not split at all. We'll get into all of that and more. First off, it's important to know a little bit about the history of the Amazon stock itself. It did its first stock split back in 1998. It was a 2-for-1 stock split. In 1999, it did another 2-for-1 stock split. Later that year, it did a 3-for-1 stock split. So, over the course of about 2 years, it split 3 times, but hasn't split since then. Since then, it's gone up to over $3,346 a share. Now, in recent years, splitting stocks has not been that popular of a thing to do. You don't see a lot of stocks doing it anymore. In fact, you're seeing probably more stocks than ever seep into the hundreds and thousands of dollars per share. Now, you got Apple just recently announced that they're going to do a 4-to-1 stock split. You have Tesla that just recently announced they're going to do a 5-to-1 stock split. You have the Robinhood traders that have just completely lost their mind and think that that means all of a sudden extra shares. Not all of you guys, but there's a lot of you guys out there that actually think that, and that's crazy. You don't gain anything from splitting the shares, but sometimes the reaction can be quite drastic, as we've seen in recent days with Apple and with Tesla. So why wouldn't Amazon do that? Well, here's my first thought why Amazon might not do it at all. You just had some major changes take place to the Dow Jones Industrial Average. You had 3 stocks that were removed: Exxon, Raytheon, and Pfizer. In its place, they've added Salesforce, Honeywell, and AMZN. Back in 2014, the last time Apple split their stock, they did a 7-to-1 split so that they could get on the Dow Jones Industrial Average. They did that because they didn't want to be so influential on the overall price action on the Dow, because the Dow is price weighted as an index and not market cap weighted. High price their stock is. So a stock like M that trades in the 160s has more influence than a stock that might have twice the market cap but trades at $40 a share. As a result, if you were to put Amazon on the Dow right now, a $3,000 stock would control the entire index. In fact, if you added up all of the stocks on the Dow, it probably wouldn't even add up to the share price of Amazon. So if Amazon had any intentions of getting onto the Dow, they would have already split their stock now and been included. I'm sure the Dow would love to have them on there, but they didn't split their stock so that they could get on there. And in order to do it, they would probably need to have split it 3-to-1 at least, if not maybe 15-to-1. So that brings me to my next point. If they split their stock, what are they likely to split it by? I would say at the very least they'll split it 10-to-1. If you're going to split your stock, you do it meaningfully. If you do a 3-to-1 stock split, it's still over $1,000 a share. That milkshake isn't going to bring all the Robinhood bros to the yard. So a 3-to-1 stock split isn't going to do the job. A 4-to-1 stock split gets it under 1,000, but come on. It's still not a meaningful stock split. They probably need to split it at least 10-to-1 for it to be meaningful. And what's interesting is that the stock splits that Amazon underwent in the 1990s, 98 and 99 to be specific, it happened at the height of the dot-com bubble. So are we starting to see the same thing with Tesla and with Apple, where people are getting very gimmicky with their stock price by splitting the shares? It happened a lot in the late 90s. It's starting to show up again here in 2020. Again, there's no value to actually splitting the stock, so it doesn't do anything, yet traders will get hyped up, just like what we've seen on Apple in recent days, where it has gone from like $400 up to over $500 a share, with Tesla, where it has gone from $13.66 and on the verge of a breakdown to over $2,000 a share. So yeah, it's a pretty big, significant move. It's gone up 50% since they announced their stock split. Before then, for over a month, it had been dead in the water. It wasn't going anywhere. In fact, like I said, it was on the verge of breaking down. But here's what you can expect, is that the more companies that do stock splits, and yes, a lot of people will follow Apple's lead, just like a lot of people followed General Electric's lead back in the 80s and 90s, people will follow Apple's lead and do what they're doing. But as more and more companies do it, the impact that these stocks have will be less and less and less. It's like it's a diminishing return. It's like pizza, right? You eat that first slice of pizza, it tastes great, it fills your stomach, but on the 5th or 6th slice, it's starting to not taste as good. It's losing its appeal, its zest. Same thing. The more and more companies that split their stocks, the less and less it's going to appeal to traders overall, because they're going to just get used to it happening. So should you buy Amazon stock on the anticipation that it's going to split their stock? No, not really, because guess what? Yes, there will probably be a boost after they announce it, or if they announce a stock split. And if they do, well, there's going to be plenty of time to join in on the run. Look what Tesla did. Look what Apple did. It was a multi-week rally that has unfolded so far. And while I think it's horse crap while it's even going up because of a stock split, nonetheless it does. So you have to respect the price action as a result. But I don't think you should buy the stock on the hopes that it splits. I think you should buy the stock based off of the technicals and based off of what the chart's telling you. So let's get into the chart right now and talk about what's going on right there. First of all, you have this nice rising trend line off of the March lows. As long as that holds, you're in good shape. The Amazon chart, though overextended, still is holding on to that rising trend line. That will define the risk for you going forward. Breaks below that trend line, you get out. If it holds above it, you stay in. Simple as that. The trend line is strong and continues to hold price above it. Now let's look at the reward, the entry opportunity here. Well, you have this box breakout here. And as you can see, it's already broken above that box. However, it's consolidating quite nicely above it. So it's like it's trying to consolidate itself before it takes that next leg higher. And when it does, that's where it has the opportunity to possibly go as high as 4,000. There's no doubt they want to get this thing to 2 trillion as fast as possible because they're trying to keep up with the Apples and the Microsofts of the world. One way to do that, do a stock split. Despite the fact that it's super gimmicky, it does increase the price in the short term. Now, in terms of stop loss, I would put my stop loss right below 3,200. That's right below the rising trend line. It's also below some recent price consolidation over the past week. Before I forget, check out down below, click on the join button and see this new exciting feature that I've rolled out on my YouTube channel. It's called YouTube channel memberships. There's 4 different levels. With it, you can get everything from S&P 500 updates, Russell Index updates, the NASDAQ updates, as well as the FANG updates, Microsoft and Tesla each week, as well as my personal watch lists and individual stocks that I'm watching or find very interesting for potential trade setups. It's down below. Click join, check it out, let me know what you think. But now this is just the daily chart. Let's look at the weekly chart and see what we have going on there. The weekly chart, extremely overextended. Stochastics is over 90. Volume is diminishing a little bit. Very few down weeks. We've had essentially 3 down weeks. That's 21 out of the last 24 weeks it has traded higher. That's remarkable and hard to ever find any stock that can do that, much less in the middle of a pandemic. But just like I talked about in that box consolidation, you have that there on the weekly and it's starting to break out back above it again. So there's a potential for it to actually make that run up to 4,000 with a stop loss below 3,200. Now, I'm not gonna lie, the monthly scares me half to death. This thing, way overbought. Stochastics reading of 95. Guys, this thing looks like a freaking penny stock. It's not a good look. Not a good look for it at all. It's way off of the rising trend line. Huge problems there if it ever decides to pull back, because like all momentum plays, there is an eventual pullback, and the higher the run without any kind of a sustained pullback, the bigger the drop tends to be. In fact, when you look at the monthly chart, what scares me the most is that if it actually does pull back, there's a potential for it to fall all the way back down to 2,000 before it finds any support. Now, I know a lot of you guys who are already long on the stock is like, Ryan, that's never gonna happen. You're crazy for thinking that, but it's very true. I've seen these things happen all the time. Microsoft, at the height of the 1999-2000 dot-com bubble, it reached $53 a share and came all the way back down to 18. So don't tell me it can't happen. It happened before. I've seen Apple pull back in some substantial ways over the years. So I would tell you is to use some discretion here. Yes, it's okay to stay long because the market's not giving you any reason to sell right now, but one day it will. And at that time, you don't want to be holding all the way back down and lose all the profits that you worked hard for. Instead, you want to have that line in the sand. That's why I'm saying, okay, if you get into Amazon and you get in it at its current price, make sure you have a stop loss around 3,200 or so. It's not guaranteed that it won't hit it or that it won't hit it and go back up. That's possible. That's part of trading. That's kind of the frustrations with trading in the beginning, is because it can't be done perfectly. So yes, you can get stopped out and watch the stock go right back up. However, you have to protect the risk, because if you don't protect the risk, you won't make it in this long term. So for me, using stop losses is one of the best methods to protecting your capital. And putting a stop loss at 3,200 makes sense because it's below the rising trend line, something that it hasn't broken at all. And while it stays above that level, it still has the support of a box breakout. So whether or not Amazon actually splits is anybody's guess. I would have thought that if they would have split by now, they would have done it in conjunction with getting added to the Dow, because why wouldn't they want to get added to the Dow? It's a very prestigious thing. They're far more qualified than Salesforce or Honeywell. But you might say, well, Ryan, they've got Walmart already on there. What do they need that for? Well, they have Visa and American Express. It has Goldman Sachs and JP Morgan. So yeah, they can have duplicates, and Walmart is more of a storefront while Amazon is more of a online presence. But again, just because they haven't done it yet doesn't mean that they won't do it. And if they do it, I would expect somewhere around a 10-to-1 stock split. That's my guess, at least. At this point, I'd probably say it's a 60% chance that they do split it, 40% chance that they don't split it. If I'm wrong, I'm wrong. I'm okay with that. It doesn't really bother me one way or the other, because what a stock's price is doesn't matter to me. It's what the charts say, what the evaluations say, all of that good stuff. If you like this video, I'd encourage you to like and subscribe. It helps me continue to put out these good content week after week after week. And down in the comments below, tell me what your game plan is with Amazon. Are you going to wait to see if it splits before you even consider getting into it? Or are you getting into it now regardless of whether it's going to split or not? Or have you been an investor in it for a long time now and you're making some major coin? Let me know in the comments below. Thank you. God bless.